Good afternoon and happy 2022. Welcome and thanks for joining our first Meet and Learn class of the year. My name is Jenny Ching and I'm your 2022 Education Committee Chair. A friendly reminder before we begin, all participants will be muted during the meeting, so please use the chat box for questions and the speaker will answer them during the Q&A session. Jeff Huang, the Education Committee Co-Chair or Vice Chair, is going to introduce our speaker and the topic today. Jeff, please take it away.
Thank you, Jenny. Good morning, everyone. My name is Jeff Huang from eXp Realty. The Education Committee of the West San Gabriel Valley Realtors is happy to host today's topic. Unlock the reverse mortgage potential with Prop 19 and increase your sales. Our guest speaker is no other than Mario Manzanilla from Rate One Finance. Mario is a loan officer and consultant for over 20 years of experience in helping people build financial security by eliminating mortgage payments, buying a home, stretch their retirement saving, preserve their investment, delay taking Social Security for greater benefit, and creating a lifelong growing safety net. Over the year, Mario has done several real estate finance presentations and taught real estate courses and seminars at Cerritos College, Pasadena City College, the Learning Annex, our own association, Temple City School District, to name a few. Mario is well educated from and attended the El Sala High School, UCLA, and graduated from Cal State University, Los Angeles, with a BA degree in economics. He was a past WSGVR affiliate chair and affiliate of the year, the LAC-BOR Security Toastmaster certification, and soon to be certified as a transformational coach from Chris Howard Personal Development Co. As a family, he enjoys going to his son's soccer games and tournaments happening almost every weekend. An avid martial arts expert, and he holds a 3rd degree black belt in karate. And most recently trained and specialized in Aikido weapons and Kupotan, a self-defense practical tool. He also enjoys a Kaizen meditation, loves experiencing different cultures, and attends many cultural events throughout the year with his wife and son. Without further ado, let's welcome Mario. Mario, take it away. The floor is yours.
Well, thank you so much for that wonderful introduction there. Let me go ahead and maximize the screen in just a moment. I do want to thank you all for and Happy New Year. And it's right. I keep very busy. My son's soccer schedule and school has been quite an interesting process over the last couple of years, as we all know. So I would like to start with just before I start with this saying that I put over there, and I will maximize the screen in just a moment. More precious than gold is health and well-being, contentment of the spirit than coral. That's I will review that as we go along, because this is when it comes down to at the end of the day for why all of this is about. There is a lot of information here. You know, this is not your, okay, this is how you make more money. No. It's about for all of you to understand, because reverse mortgages have a lot of misunderstandings. Most people do not understand. They hear about it. And even clients and some realtors, they even ask me, well, how much, what is the mortgage payment? And there is no mortgage payment. So it's a lot of education. So don't be overwhelmed. There is a lot of material here. But the whole idea is for you to understand how this really is and what it takes to get a reverse mortgage. So with that in mind, I'm gonna go ahead and start doing the presentation. This is what the whole thing is. We're going to talk about Prop 19. We're going to talk about reverse mortgages. We're going to talk about what's really happening. Obviously, COVID-19 has done a lot of changes, even the way of thinking of many people. You start hearing it, and I have some data that you would be interesting for you. So you can see that this is not just the demographics of this type of opportunity is growing dramatically. So I'll move on. Baby boomers. This is one of the fastest growing demographics. Who are they? These are the people that are now between 1946 and 1964. There is 72 million baby boomers in our generation. There is 11,000 of these baby boomers. They're turning 62 years or older for the next 16 years. This is a huge market. You can see this growing and growing and growing. I am sure that you know family members, some of you personal clients or what have you that are going towards this direction. And now with COVID-19, you start hearing that even more. Some people want to retire. They're realizing, you can see this, what they call it, the great, where people are not wanted to shifting jobs or rethinking their priorities instead of just chasing the buck on jobs and what have you. I'm sure that you have heard all of that over and over. I'm not going to recap on that, but this is statistics. You can read them all over the place, and there are a lot of concerns about some of these statistics, and you will know, and you will see why in a moment, okay? 25 million of these baby boomers, these are the demographics, will rely on Social Security for 90% of their income. That's a good and a bad thing, because a lot of times Social Security is not enough to rely for a retirement, and millions will not be able to meet their financial needs. That is already happening. So with that in mind, I'm going to go on in a little bit more into this. This is actually from the West San Gabriel Association of Realtors, the baby boomer demographics in our area. Percentage of homeowners who are baby boomers, 40.9%. Is quite a chunk. That's 40% that are baby boomers that were born in that age group that we're saying. Baby boomer population share is 18.3%. Number of baby boomers owned households, you can see it's 208,000, and rented households 193,000, and the median home price is 764,528. This came out actually from our board from the West San Gabriel. I saw the statistics, and probably already maybe some adjustments over the last few months, but this is more or less gives you an idea what we're talking about. So you can see this growth going, and more people are going towards the retirement in that direction. So most people go, okay, I'm totally prepared for retirement. Well, as long as you die next Tuesday at lunch, basically they're not. We have a retirement crisis in this country. Save 20% of your income. This is what we're all told when they're working. Max out your 401k, diversify, and stay for the long haul. You'll be fine. Well, once you retire, you can withdraw 4% to live on in 1 million, which is about 40,000 a year. Which, by the way, this is on top of your Social Security, which is great. However, you're supposed to replace 75% of your working income, and in some instances this is not happening. So this has not really worked as well as we're told it would. Now, keep in mind that not a lot of people have even done this type of saving for the 401ks and maximizing it or what have you. You will know it even with your own families and stuff, that they're probably sometimes they don't even have any savings. So Americans are having a hard time saving. Obviously now even a little bit more. There's been a lot of changes over the last couple of years, inflation, job changing, retirement, all kinds of stuff has been shifting over the last 2 years due to COVID-19. And honestly, in my opinion, this kind of shift, people are realizing what's the prioritizing of certain things in life. So they may not be just anymore looking for work. This is why you're seeing all of these dynamics going on. And I think it's going to go for the long haul. So another thing, pension plans used to be common. This is a lot of people will work. I have family members that older, and they have pension plans, but in the majority of cases, a lot of the companies no longer offer even pension plan anymore. So very few, usually like companies like Boeing or Kaiser Permanente but very few, Northrop Grumman. If you don't, most of them don't. People entering retirement are still in debt. This is a very common situation. Most of my clients, I have had clients that in their 60s and they want to retire. And I actually should have invited this other person one day when we have a live. One of my clients, she is 62 and the husband was 62 also. They wanted to retire and they had a lot of debt. And they know that they're working for a few more years. The issue here was that the reverse mortgage, that was one of the things that it helped them to pay off debt by not having the mortgage payment. I'm gonna go into more details and some real examples. You see how this thing works. So job growth and job stability they're not as strong as actually, they're not as they are today. Everything is shifting. Housing cost, well, we all know that. You all know that. Being realtors, you know what has happened over the last even 3 years. If you compare the home prices 3 years ago compared to now, it has been a dramatic increase in price. Will that ever go on all the time? No, not perhaps, but on history, over the last 100 years, if you compare 1950, 1960, 1970, 1980, the home prices, and now, even after 2008, when it went all down, and now where we are, you can see that historically, that there is that increase. Long-term care, that's another major thing. Health, this is another major concern that when people are in the older ages, is the long-term care and the healthcare costs. It's an issue that needs to be addressed even more now in our days, because you can see that the generation is getting older. And by the way, I have heard, and you can check that, into your own research, that not only the United States is experiencing this, but there are other countries, Japan and other countries in the world. There are generations that are getting older and older as we move along throughout these times. So people are living longer. That's another thing. The average life expectancy, obviously compare that to 50 to maybe 60 years ago in the early 1900s to now, the life expectancy went from almost 70 years in 1960 to 78.5 in 2018. So people are living longer. So this is has to be addressed, and to see how they're going to be dealing, how we're going to be dealing with all of these issues with the health insurance, long-term care costs, housing, all of that is affecting actually that particular demographic. Market instability, bubbles popping up. You remember back in 2008, people that had what they call 401k plans, they were complaining because they became 201k plans. What that means is that, because of the market went down, they lost a lot of money on their stocks or what happened, the investments that they had. And if you're retired and you're dependent on this kind of income, it becomes quite a challenge. So all of this, the reason why we're putting all of this together, so you can see the bigger picture, that is not only a product, that is a part of a solution that may help some of you, your clients, family members, purchasing or refinancing just like any other loan. But you will see how this thing will work. And by the way, here's where the source of all of this information came from: Will Stowers Watson Advisory Firm. And the other thing is not because people are irresponsible. Obviously, there's a lot of changes in our environment. And even though over the last 2 years, it's even more dramatic changes, and we're still on, this presentation was supposed to be a hybrid, but you see, because of the changes, we're back into that because of COVID-19. Hopefully things will get a little better. And even at that, some of the people, or you will see those shifting, is because it's no longer it's a mind shift that is happening all across. So our environment has changed more dramatically over the last 2 years. Also, risk and longevity, risk, they're both at play a big role. And this is an example. A lot of people do have money. They have saved $1 million in a 401k. And even if you look at the examples, and they usually tell them, okay, withdraw 4%, from your money. At the end of the 2012, when they basically had 12 years later, you can see that if there is a huge reduction, went to 350,000. So really, how long will it take you to eliminate your 401k plan? For those of you that have saved $1 million, that's really the message here. So some of them take more. They take 11% of their investments, whether it's stocks, bonds, or what have you, and to maintain that income, in addition to Social Security. But you can see people are getting older. The funds are depleting faster. Changes are happening rapidly. So it's very hard to plan. And also the taxable situation with 401ks and IRA are both taxable, and again, subject to the market risk. So the reality is that $1 million in retirement today, if you have it in stocks, bonds, 401k, is really more like $600,000 or $700,000. And depending on the market at the time, it could be a lot less. So hopefully things could keep growing, and we'll go from there and helping this demographic. But this is going on, and I think it's going to continue to be in this pattern. And this is where the solutions can come in, and you start seeing more in detail as we move along. So even though many people are not strapped for cash, they're not even close to being financially secure in retirement. This is one of the key things. And this doesn't even include the health, the long-term care and some of this health. A lot of my clients that have had the reverse mortgage have used it to protect their savings, like what I just went and discussed, to prolong their retirement and for health care. This has been one of the major issues also. So the reality is nobody can really plan to make it for 30 years without income. I think one of the quotes that I would like to say is from John Lennon, that basically says, life is what happens to us while we're busy making other plans. So that's really hard to plan. So life happens to us when we're doing other things, making other plans. So that's why it's kind of, we can plan ahead and we can start working with this, and it's very hard to, and particularly in the income, we can have a little bit more certainty with certain things that we can choose to do, okay? So no one has ever successfully planned for retirement lasting as long as we're living today. And when Social Security began in 1930s, checks started coming in at age 65, and the average male died at 67. Well, now we know that has males, and both males and females have increased their lifespan. And Social Security was, at that time, was not designed for that, but now they have to, I think they may have to increase the amount, which I think the government has started to do that, adjusting to the new ages. So even in a low interest environment, it's not possible. Cost of healthcare is impossible to plan for, because the reality, if you're healthy at this time, that's great. I think that's the real key issue for all of us, including myself. It's not a presentation here, it's just sharing some important information that health, it becomes a crucial issue for all of our lives. The healthier we are, the better we avoid a lot of these tragic situations. And lastly, this is a comment now, which we tie in some of this stuff with the reverse mortgage, which I will explain to you in a moment. Almost everybody can benefit from some application of the HECM. Now, HECM is the real name for the reverse mortgage, which starts with home equity conversion mortgage. That's really the name for the reverse mortgage. So a lot of benefits can happen by just understanding. So the whole idea, what I'm presenting here, is that you get an idea of what's happening. What is the demographics that is being affected? How COVID-19 has affected even more of what we just discussed, and you can start seeing this shift in them, not only in mentality, and some people are planning now to even retire earlier. So there's going to be a lot of movement here coming up. Some people either selling their homes because their kids are grown. You will see that they say, gee, why am I living in a two-story home, 2 floors, and now all of my kids are gone, and I only need this. Or some people would like to upgrade. That says, our house is kind of small, and I would like another bedroom, and I would like to sell this home and buy another one. But here's the real issue with this. As they retire, as we all know, most of them, and you have seen the demographics and you have seen some of the issues. Okay, if they're going to buy a home, and by the way, I will discuss, I think I will leave that for the moment, because that we'll get into the numbers later, and you will see how this will apply. So I'll take that for later in a few more minutes. So somehow everybody can have a benefit, and I will explain to you how easy and how to go about it so people can make the right decision. There's no sales involved here, or to your clients. They can easily make a decision, and you will see how in a few minutes. So first and foremost, I just wanted to make a big comment here, and from the big misunderstandings. Reverse mortgage is a retirement tool. Keep that in mind. It's a retirement tool, okay? You can use it to buy a home. The key and the main purpose of it is eliminate mortgage payments. What that means is that once you have a reverse mortgage, there is no mortgage payment. I had a realtor that asked me, well, if you get a reverse mortgage, what is your monthly payment? There is no monthly payment. The second part is stretch retirement savings. We just went through a whole process where we saw that what happens when even if you have $1 million in a 401k plan, you're withdrawing at 4%, what happens over a period of time, and then and not only you get taxed on that, but also it usually gets wiped out fairly soon, and it all depending on the volatile, how the market is, on those markets. So what happens when you have a reverse mortgage and you do not have a mortgage payment? Well, some people are paying $1,500 to $3,000 a month, which is very common now, and instead of using that, their retirement savings, they use, instead of paying the bank the $1,500 for 20 more years to go, they use that money for their own living or for what they need it for, and do not take the money out of their retirement accounts. You see how this actually kind of stretch their savings? Because by not pulling money out or minimize that, it extends the amount of money. How long will they actually be able to withdraw that money for over more years? The next thing is to delay Social Security, because the older, after you reach 66 or 67, that's your full retirement age. That's a Social Security number. From there on, you get your full benefit. If you retire before, if you're 62 and you retire, you're gonna get less benefit from your Social Security. And if you retire after age 70, you're at the full retirement, not age, but you to maximize your income that you will get on your Social Security. Incidentally, as part of the resources that I offer, I just wanted to let you know, and for you and your clients, and for many of the people that you may know, I have an organization called the Social Security Advisors, and they can actually help people to maximize their Social Security. Sometimes by people think, oh, I'm just gonna get my Social Security. No, they can get spousal benefits, they can get child benefits. There is a lot that goes on that we're not aware of, and they can actually give you the numbers and everything. So if you ever need somebody that needs that kind of information, let me know. I will have my contact information at the end, and you can call them and they can help your clients or what have you, how to maximize their Social Security benefits. Particularly are helpful for those that are going to retire or thinking of retirement, okay? So it becomes a lifelong growing safety net. So the longer you live, obviously, the more, and there is no prediction to how things are going to turn out. We can, like I said, things happen as we're doing other things. That's what John Lennon said. So we just need to be the best prepared that we can. So keep in mind, the key portion here is that reverse mortgages is a retirement tool, okay? And this is what it does. This 5, 6 issues here, the 5 issues that I just mentioned, 6 issues, I'm sorry, they are all of the stuff that it can be helpful for, or a combination of. So how do you describe a reverse mortgage, which is a home equity mortgage, a convertible mortgage? It's basically an FHA mortgage that doesn't require that you make payments. That's the key, on any certain schedule, except upon the borrower's death or sale of the home. So the bottom line is, when is the reverse mortgage due? This is a key part of the information that a lot of people get misinformed, and I will clarify that right now. The mortgage, it is a mortgage and it is a loan. When is it due? When people die, when both, say it's a husband and wife, they both apply and they both gone, that's when it becomes due. What happens when they are both dead? What are they forced to sell? And the answer is no. If there's a daughter, son, or somebody that wants to refinance and take over the loan, I mean, not the reverse mortgage, pay it off and get a loan, that can happen. So it's a lot of flexibility. They can also sell their home and pay it just like any other regular loan. And or if they sell the home before, just like any other regular loan. If you have a loan, doesn't matter whether it's a reverse mortgage or not. If you sell it, you have to pay off the other loan. Escrow handles all of that. So keep in mind that that's what the reverse mortgage. There's a lot of flexibility. And one more thing, because I have had clients. In fact, last year around this time, I had one of my reverse mortgage client that unfortunately passed away due to COVID-19. Exactly last year around this time, and it was a referral from one of the top realtors in this area. And she had it for about 3 years. And unfortunately, her son, the gatherings or what have you, they had the increase of cases last year, the same as is happening now, but there was no vaccination. He brought it in, and the son died and the mother died, and she's the one that had the reverse mortgage. So it was quite an unfortunate situation. So what happens then? It wasn't a living trust. So you can have who holds title, you can have it on a living trust or your regular title. It doesn't matter, it's your home. So one of the sons, if they want to take over, they can refinance, they can sell the home, and that's it. It's just that simple. And basically you pay when you die instead of you die. I mean, I'm sorry. Yes, that's right. You die and then you pay. That's what happens. That's the reverse mortgage. The other one, the regular mortgage, you're paying until you die. So it's your preference. You pay until you die. You keep refinancing. I have an uncle that is 86 and he was talking about refinancing for a 30-year mortgage. You realize it's going to be 116 years old. I mean, what's the likability? That's what I mean. And there's some people in their 70s that are refinancing on regular loans and they're realizing that they're going to live with that loan probably for the rest of their lives. Oh, incidentally, I just want to let you know two more very important facts. FHA has just increased the loan amount for, as you know, for regular loans and the reverse mortgage. They're not at over $820,000. Okay, so that's quite it fits quite a number of the population that we're talking to and that we know of. So as you can see, the opportunities will come in as you will start seeing how this develops and how the numbers will work. Now, the next thing is, and I just wanted to let you know, I'm one of the few loan officers out there that has what they call jumbo reverse mortgages. This is from one of the biggest institutions in the nation. It's not AAG, but this one goes to up to $3 million. This is for the people that are in the Arcadia, San Marino, that, oh, gee, I have a $4 million home and I need a $2 million reverse mortgage. Well, FHA is not going to cover that. So there is a jumbo reverse mortgage for that. I just want to let you know of that. It's not in this presentation, but it is now available. It's been available for over a year, very successfully, and has been already implemented and very proof, and they follow pretty much the same guidelines as FHA. So I just wanted to let you know of that. So there's a jumbo reverse mortgage. So the other thing is, most people say, well, what if I want to make payments on my reverse mortgage? You can make payments at any time you want. Do you have to? No, you don't. Some people say, well, I want to make payments. So you can. There's a lot of flexibility on this product. Or you can decide not to make payments, in which this case, the interest simply accrues to the balance. And you will see the actual numbers, what this all means. I have examples of that coming up. So, and this is where most of the confusion starts, you know, well, where's my loan gonna be? And you will see how this is all, how it's all determined and how the client gets all of this information so they can help them to make the correct decisions. And they will let you do it that way just because you're old. The older you are, the more you get. It's just that simple with reverse mortgages. You will see how easier they are to qualify than regular loans. Okay, that's a key component that I've been just saying. They're a lot easier to qualify, whether it's for a purchase or for a refinance. So moving on, it is also, many of them get tax-free capital. They get a line of credit and a very low interest rate. And the key here is that they don't have to make payments on it. So you have a $300,000 line of credit and you borrowed $100,000. What are your payments going to be? Zero, unless you want to make a payment. Now, interestingly enough, when I start getting into the purchases and Prop 19 and ADUs, what happens if somebody has a $300,000 line of credit from a reverse mortgage? Can they use that money to use for an ADU and get income from the ADU when they rent it? Absolutely, there are no restrictions. And will there be any mortgage payments on the money that they borrow from that reverse mortgage? Absolutely not. So you can see how they can generate income to help them for their retirement purposes just by even investing on an ADU, in case that might be a solution. Is obviously ADUs are not for everybody, but just like anything else, you know, I'm just opening this opportunity for you all to see how some of this can also grow to a different level just by having a reverse mortgage and having no mortgage payments and having a line of credit and all of these other things that it offers. So the question is it math? or is it emotional? In my opinion, for over the years, it gets more emotional. You can hear, oh, they're going to take my home away. They start putting all of these conclusions that are not really true, you know. So who is asking? It's always emotional. At the end of the day, it's really about freedom, security, peace of mind, and dignity. Because in reality, you're really putting the gold back into the golden years. You work hard, you did all of this, and now, you know, with all of these situations, all of these circumstances, it could put you into a binds that you can probably avoid just by using this tool. So some of us need to do the math to justify the emotion, which, by the way, is exactly what we do. And I just wanted to make clear, very, very clear what happens with a reverse mortgage. Any client that wants to do a reverse mortgage, I know that organizations, that when they do presentations, oh, you can use a calculator that you see how much you're going to get. Well, that's all fine and dandy. But the reality is they want to see the cost. They want to see pretty much everything. And it doesn't cost anything to get that information, by the way. And there is no commitment. I'm going to go into details in how that works, okay? So it's an opportunity for anybody to see, will this help me or not? If it does, they will know it. If it doesn't, nope. You know, so that's simple. There's no gimmicks, games, nothing like that with reverse mortgages. So here's a classic example. And by the way, this is what the client gets as a preliminary, so they can see what they will get just by providing some basic information. This is a real case scenario. I didn't do this reverse mortgage, but I know the account executive that did, and he actually shared that information because this is what they get. This is the exact information that they all get. This happens to be an 83-year-old borrower, taxi driver in Long Beach. He was working because, as you can see, he had a mortgage of $278,000 at 83 years old, and his payment was, you will see it in a moment, I think it was somewhere between $1,500 and $1,600 a month. His home value, this was done about 3 or 4 years ago, so you can see the home values are a little different, so bear that in mind. Home value was $550. There was no cost to the borrower. He didn't have to come up with any money out of pocket. Basically, all of the costs were included into the reverse mortgage. And this man was one of the key things that I heard about this transaction, and you will see now how this thing worked, is that he was working just to basically pay off his mortgage, just like as the case scenario we've been just discussing. The Social Security was not able to cover all of his expenses, and that's all basically what he had. So he just had the home, and he had the value, and he had a mortgage. So the question comes to me, what is an 83-year-old doing with a $278,000 mortgage? Now you can see now all of the theory that I was just talking into real practice. So you can also see that home value is at $550, and he almost owed $270, almost $300,000. It's over 50%, almost 60% of the loan to value. See the equity versus how much they owe. So let's look at what happened and how they determined all of this. If it was, this is what I mean, that this is what they get, and they determine if this will work for them. Well, given all of that situation, this is the real one. This borrower at 83 got $26,620 in cash at closing. So this is what it looked like. This is his transaction. This is what they get. All borrowers, not at close of escrow, they get it before. So if somebody asks me, Mario, what will I get? This is, they get this, and it's a requirement by HUD. So in this case, they get this, what they call the whole projection here, which is also a requirement by HUD. You can see that at 84 is because FHA, just like the other loans, has a mortgage insurance premium. And obviously this rate was a few years back. It was at 5%. And the MIP is the mortgage insurance premium and the interest that he paid. So his loan balance is at 336. This is how he started, at 336,000. You can see the numbers. there, right? But his property value is also growing up at 4%. That's how the average growth over a period of time that happens, that HUD requires to do those projections, so you can see. So what happens here? Okay, if you look at the bottom at 15, when this person is 98, right? With the MIP, where all of data keeps increasing, his rate and his interest at $35,000, his loan balance has increased. Now it's at $731,823. Can you guys see all of that when he's 98? Even though he has all of those costs, the interest build up, the loan balance increased when he started from 336, which is now at 84, to when he's 98, he's now at 731. And he didn't get a line of credit. He got 30,000 in cash because of his debt to, his loan to value was already almost maxed out. But look what also happened to his property value. Okay, he went from 572 when he was 84 or 15 years before, but now it's at 990. So as you can see, if you take the property value and you take it out of the loan balance of what he owes, where's the equity? Well, he still has $258,000, which is the last bottom column, last number bottom at the right-hand side. You can see. So what happens when he dies? Who gets that money? Well, if he's in a living trust, whomever is in the living trust, when they sell the house, can they refinance? Yes. If they can refinance and pay the loan balance of 731, now you start seeing the actual situation. Somebody qualifies in the family, wants to pay off that loan, that's fine. They can sell, or they sell that difference in equity goes to their heirs, whether it's in a living trust or if he has a will or whomever. That's how it would work. So now you can see it demystifies this issue that I hear, oh no, the bank is gonna take over. The bank doesn't take over. It's just the equity goes to there, just like as anybody else's if it was even in a regular loan, same thing. Now, compare that to a traditional mortgage. What if this man would have kept going to a traditional mortgage? His loan balance would have been at 318. If he would have refinanced, and obviously at that time was at 4%. This is a couple of years back. Here's his mortgage payment. You can see $18,240 annually if he were to refinance and lower his rate at that age. So is it worth it for him? Now you're seeing the real numbers here to keep paying basically until he dies or more, 1520. So now now you start seeing the real clear picture of what I just said. You die and then you pay, and the equity, that's the reverse mortgage, and then the equity goes to your kids. The other one, you pay, you keep paying your 1520 a month until you die. And then in the meantime, what is the quality of the lifestyle of this 83-year-old man that he has to work as a taxi driver to make this thing work for him? Is it worth it? That's really the question. I hope that you see this thing. And if you have any questions, by all means, give me a call. I will send you this example here because this is what we're just talking about. So it's not anymore the theory and the projections. You start seeing, and I'm sure you know people in real life that are into this type of situations. This man, I understand when they closed escrow, he was in tears. He couldn't believe that he didn't have to work. He says, you mean I don't have to be a taxi driver anymore? And no, if you want to, you can, but it's up to you. And any money that you make is your money for your travelings or whatever you want. And he was really, and he knew because he had all of these numbers and projections in front of him way before close of escrow. Okay, so they all get this type of material. That's a requirement by HUD. So the next thing, so the reality, his loan at 300,000. I mean, this is pretty much what we already discussed. His payments were a little higher. He had 24 years left to go. So, which would have made it to 463,000. So what is this man doing at 83, 24 more years? You figure, do this simple math, 83. and 24 more years to go. We're a payment of that nature. That's the real question. What kind of quality that he had to work as a taxi driver to make this thing happen? And I'm sure you know some clients that are in those type of positions. Obviously, this was a refinance, but I will share with you in cases where Prop 19, all of this can help. So, and this continues on, and I will just kind of keep it simple because we have to move on. If the borrower does nothing, if he would have just kept on going, 10 years from now, the balance would have dropped, so because he's paying principal to 200 and from 278 to 208, which is a $70,000 difference. But he had to keep on working. That's the thing. So if the borrower stops making payments, which is what would have been what happened to him in 10 years, he would have saved $193,000, 255 in a mortgage payments alone, because all it is the math. If you do that 1610 and just, you see, it goes back to what I just said before. See how this thing starts coming together? Is it math or is it emotional? When you start looking at in depth, like what we're doing now, and you look at the math, then you start saying, oh my gosh, what do I prefer to do? Keep paying for the next 25 years. I'm 83. For the next 24 years, $1,610, or use that money for my retirement, do not have to work whenever I want to. And on top of that, in 10 years, that $193,255 that I will be paying the bank for my mortgage to stay there in my house, I have it for my own living. That's the real, this is the classic, one of the classic cases scenarios in what we just discussed, okay? And in addition to, they can pay off debt. A lot of them are in debt, and they can use those monies to pay off debt. So you can see, you can start seeing now the math and what happens when people do get this type of product. And it's not for everybody. Obviously, there are some people that have a couple of million in the bank. They don't, whatever happens, they're set. But it can help a lot, and a lot of the people that you may know, or for clients to be. So here's another case scenario where this 62-year-old borrower, which is, I figured he was kind of young, he is still employed, doesn't need the money today, but get this, his value is at 750. He had a mortgage is eliminated. He had 15,000 cash to close. And the key that this person had, by the way, I had a realtor from the West San Gabriel that actually did exactly this. House was paid off. And I even asked, why do you need a reverse mortgage? And you start seeing why. She, it's a she, one of the realtors. I'm sure you all know her. I'm not going to mention the name for privacy purposes, but I asked her, why do you need this reverse mortgage? Your house is paid off. And she basically stated, you know what, Mario? I live in Social Security. I do earn some of the incomes here from selling real estate. But if I want to take trips, or if I get sick or what have you, I may not be able to afford some of this stuff. So what she did, she got a reverse mortgage. She basically got a line of credit. And just like this scenario, and look what happened. You know, it kind of pretty much the same. This person got some money cash at the beginning, right? In this particular, and it was 62, got a reverse mortgage, and you can see the MIP, just like the other one. Here's the interest rates, and you can see how it increases over a period of time. But look what happens, that he had a small loan balance in this particular case scenario. By the way, all of this information is provided to the borrower before they even decide whether they're gonna, this is how the numbers they get. They say, if this is a tool for you, they can see it, what's happening, so they can make an educated decision. So look what's happening here. At age 62, he got a reverse mortgage. He got, a little bit of cash out. He got 15,000 at close. He didn't have to bring any money. He didn't take any more money out. His loan balance was at 76. He had a line of credit at 239,000. The value of the property was at 780,000. And he obviously has equity. When you deduct the equity, which is on the right-hand side, you can see it at all the way to the right-hand side, 702,000, and you take the loan balance out and the line of credit 700, you can see what's happening here. Now, over a period of time, and this is what they all get, say year 12, now this man is 73. He did not use his line of credit. He did not use at all, right? Look what happened to the line of credit. It went from 239, now it's at 451, 453 in a 10-year period. It increases every year. Isn't that crazy? It's not like you have a line of credit at 239 and it stays like that for the next 10 years. It actually accumulates interest too. So, and you don't have to pay for it. In other words, if you don't use it, it's not, if you look at the loan balance, it's not added there because you're not using it. You're just having it there for any type of protection. So if in case that he needs health care or long-term care at $5,000 a month, he's going to have enough there to cover for that. So look at the loan balance. It's only 144,000. So the property value increased from 780 now to 1.2. So if something were to happen, if he dies and he still has a million, what is it, 55, you can see it on the, which is that equity again goes to whom? If it's in a living trust, goes to whomever is in a living trust or is entitled. Can you start seeing what's happening here over and over? You can see the repetition on different kinds of scenarios. In this particular case, this person got the line of credit. Now, here's what happens. Most of them, and I have clients like that, they keep accumulating their line of credit. Sometimes they forget that they have a line of credit. I have a client that just called me about 2 weeks ago. And guess what? His house needs a new roof. And he's a senior, he's in his 80s now. And he tells me, I said, hey, Mario, I need some money, but I don't qualify for a loan anymore. I can't go to get a HELOC or anything like that, which why am I gonna get a HELOC? They tell me. I learned from these guys too. So he said, I told him this. I said, remember you have a line of credit and you have 200,000 there. And he forgot all about it. All you need to do is place a phone call and how much is your roof? 50,000. Just tell him to transfer $50,000 to your bank account and you're set. He couldn't believe it. How much am I gonna make in payments on that? Zero. You see what's happening here over a period of time. They need repairs of their home. They need several things that have happened. Oh, the car broke down, and this is where this thing comes about. But here's another thing. In this particular case, this guy, okay, now he's 72 or in between somewhere. He decides to put an ADU. Say when he's 65, he's going to retire. Says, you know, I'm going to get an ADU and rent it. Well, he can use this line of credit. At what payment per month again? Zero. Can he make payments if he wants to? Yes. Does he need to? No. You see, it's all part of it. And can he create income? What if he doesn't decide to do an ADU and buy a second property? I wanted to let you know, particularly for realtors. I have this realtor. Actually, some of you may know him. He once in a while he goes to the Arcadia board, and once in a while he does show up at the West San Gabriel. He is this realtor. It's quite interesting. He moved to near San Diego, right on the beach. His office is a boat. It's a huge boat. He has even invited me. He says, come on down to see my office. And he has it's not a little boat. It's one of those boats that you can actually live there in a boat. So he says, I sell lifestyle. This is what he tells me. So he had a client, and I'm not sure how he does it. Quite frankly, he's quite creative on what he does, because I see his posting sometimes in Facebook. I had one of his clients. He was selling their home because they were in a financial bind. Actually, when COVID-19 started, almost 2 years ago, sold the home because they were the husband lost the job and they were having financial difficulties. Now, they wanted to buy with a reverse mortgage, and they did. And they had plenty of money. So not only they bought with a reverse mortgage, and they were in their mid-60s, right? 64, somewhere there. And it happens that instead of buying it all in cash, they said, we're going to put half and buy the new home with a reverse mortgage. And this was in Ventura County, by the way. I believe it was Port Hueneme. I think that's if I remember well. And they bought their home and they had enough cash. And this guy says, you know what? I have another condo, a condominium, and that they bought that with the difference in cash. They bought, so they have basically, this guy made 3 deals. He sold their home, they bought a home with a reverse mortgage, and they bought another condominium. And that condominium was paid in full. And these guys were earning, I think it was about, this is 2 years ago, somewhere at $1,700 a month, no mortgage payment. They were living over there close because I got the pictures. I said, look, we're about 2 miles from the beach. And I'm going, oh my gosh. He says, this guy's in a new life, completely new lifestyle. So he does that continuously. And he kind of, I don't know where he gets this. He's all over the place. I seen him going all the way to Barstow and getting for 160,000. Look how much you can get, or Port in Ventura County in some areas, and they're not bad areas, by the way. I don't know how he does his research or how, but that's how he uses this. So you can see how this can be used, not only can be used for many things as a tool, for investments, for ADUs, all of that stuff. So what else does that? Nothing. That you don't have a mortgage payment, that you live there until you die, that you have all of this, tax-free in case you need it. You can invest, you can do, there's a lot of flexibility. That's the point. So, and you don't have to repay it with monthly payments. If you want to, you can, but you don't have to. So, and the line of credit grow even if the property value goes down. That is the craziest part of it all. You remember that line of credit here? Let me go back to this number here. Look how it keeps going up, right? If you look at year 1 and you look at year 12, what happens if the market tanks, right? The other way around. This is why the MIP goes in. This is kind of what I believe why. Because if the market tanks, and this guy, suppose that his property is now worth half of it, the property value. But the line of credit keeps increasing the same. So 10 years down the line, 12 years down the line, instead of 1.2 million, let's say that is now the same value as the loan balance, which I would doubt it. I don't think it's going to go from 1.2 million to 145, 144 to 86. But let's say it goes a lot, what happens to that line of credit? It keeps increasing. Isn't that something crazy? The value of the properties are going down, but your line of credit is going up every year. So that's something to look at. People don't know this kind of thing. See, and this is why you're here. I'm really happy that you're all here understanding this, because this is the misconceptions that people have, and they don't understand how can they use this tool for their retirement and investments or whatever. One thing I want to mention, reverse mortgages for owner occupied only, okay, not for investments. Now you can use this money to buy investments, just investment property, just like, or an ADU to your property, just like what this other realtor does, how he has helped some of his clients. So I just wanted to point that out, okay? So you're getting tax-free money, increases your line of credit every year. You get a HELOC, it doesn't increase. That you get a HELOC at 200,000, it stays like that for the next 10 years. Only does this until you use it. Here, it keeps increasing because it's basically you're using your home. And if you don't use it, it keeps increasing even more. So, and if it goes, if the properties go down in price, it keeps increasing no matter what. That's the craziest. No, I haven't heard of anything that keeps increasing even if the prices are going down. So that's another thing that I wanted to point out. You can see there's a lot of information here. So again, doesn't have to be paid once, we already did that. So nothing else does that. And that is a truth. Nothing else does that. So retirement reality check. We go back to all of this. I have given you some really specific examples with some real numbers. So mortgages were never intended for people in retirement years. That's a key portion. If you have somebody at 74 with a mortgage and stuff, good luck. You know, I can tell you, unfortunately, I have a client right now in Monrovia. I'm not even sure if I'll be able to help him. I basically said that it might be best for her to sell her house. House is worth about $1.4 million. I'm not really sure how she has survived, quite frankly. She owes over $800,000. She's on Social Security. Her husband had passed away. She's on Social Security at less than $2,000 a month. I'm not quite sure. She's been, incidentally, she's in foreclosure. She's been fighting foreclosure for the last 7 years with attorneys. I'm not really sure why they haven't really closed, you know, I'm not what's happening there altogether yet. Now, she approached me with a reverse mortgage, and actually she got approved on a jumbo reverse mortgage, but I'll explain that later. It's another subject of conversation. So
Mario,
yes,
there's a few questions I think
okay.
folks are really interested in getting your expertise advice on. Do you
Okay,
think we could start on some of the Q&A?
sure.
Excellent. Thank you so much. I think we have a question from Rick W. He's asking what happens to property if the equity of the property runs out before the owner's death. I think this is in regards to HECM type of loans.
Okay, so if there is no more, if the interesting part of our reverse mortgage, even if the market crashes, so what happens? Nothing. They stay on their home. They don't make the mortgage payments, and if they have a line of credit, it keeps increasing. Isn't that crazy? So in reality, nothing happens until they die. So here's the other beauty of it. And I'm glad for this question. What happens if they die and there is no value here? What happens? Do they go, if it's a regular loan, you know what happens. Most of you have already know. What do you think it would happen? Well, they're gonna go to this, what is it, short sale or anything like that. Well, in the reverse mortgage, who's liable? It's a non-recourse loan. That means the market can crash. This is a great question, by the way. And they can actually owe more than the house is worth, and they both die, and now it's in a living trust. So who is responsible? Nobody, because they say, well, it's a non-recourse loan. They cannot go after anybody for any deficiency mortgage. Hopefully that helps. So nothing happens.
Very good. The next question is from Frederick M. It's a two-part question. The first one is, with reverse mortgage, does the homeowner have to live in the house for the life of this special program? And about now, what's the current mortgage rate for a reverse mortgage?
Okay, great questions. Two, is for owner occupied. It is designed for seniors because it's obviously for the older community to stay in their home, right? And it's not for rental. Now, can they rent a room or what have you? Yes. Can they build an ADU? As I say, yes. But can they move completely out and don't come back and use it as a rental? No, that's not what the purpose of that is. Okay, so, and the second question, what was the second question again?
What's the going rate? And then on top of it, what's the age do they start qualifying? At what age is it considered a senior for these type of loans? Great
questions. The rates here, they're roughly a little higher than the Fannie Mae, Freddie Mac type of rates. And you're looking right now about somewhere in the 3%, 3.5%, less than 4%. So they're a little higher. But I can always tell you this. When people look at those tables and they look at it, a lot of times they don't care about the rate. 99%, and it's not that they're not important. That's not what I'm saying. They care about the overall picture benefit of it, let's say, because they know they're not going to make a payment, But the question is, what am I getting for not making a payment and using my equity? You see what I'm saying? And they got those numbers. So a lot of times they don't even ask me about race, but they have it there. They point it out because by law, they have to have it. But they're usually a little higher. You're looking around somewhere around 3.5 right now, when the Fannie Mae's are a little lower, but usually about a point higher. Any
Thank
other
you.
question?
Yeah, this next question is from Rick W. What is the max LTV allowed on a reverse mortgage loan?
Oh, great question. It's really based on age and equity, which I'm going to move forward with that and rather quickly because I know we're running out of time. But it's age and equity. Like the older you are, the more you get. The younger you are, the less you get, right? And the minimum age is 62. Incidentally, I have a lender now that is doing not reverse mortgages, but kind of like a preparation to a reverse mortgage. They kind of use the same qualifications from 55 and up. Okay, but that's a different subject. This might be another presentation. So that kind of like from people that want to retire earlier than 62, they can maximize their Social Security. They don't have to make payments. I mean, there's a lot of little other tools that we have, but for the reverse mortgage, the FHA, the HECM, and the jumbo reverse mortgage, they go up to $3 million, is 62 plus. And the older, if you're 83-year-old versus a 74, who's going to get more? The 83-year-old. And we're going to go into that because people ask me, what does it take to qualify? And we're going to get into that. So I'm going to move forward. Any other questions rather quickly so I can address
Yeah,
that?
another question is from Susan B. If
Okay.
you have a couple around 75 and 62, and they're counted for the benefit purpose of sorry, I'm rereading the question. So if will a couple qualify if one of them is age 75 and the other is age 62?
Yes.
Yeah. Okay.
In fact, well, that's a great question here. They use the numbers on the lowest age. So in other words, 75 and 62, they will, when they run those numbers, they're going to base it on the youngest of. So it will be towards the 62, what they will get, you know, the youngest of, if there's a married couple. And this was a change in the law of 2015, and this, which is a great point that, what if somebody is 64 and the wife or husband is 55? What happens? Can they get a reverse mortgage? The answer is yes. The age of the youngest one doesn't matter. They're just gonna look, they're gonna run those numbers based on the youngest of. Okay, so sometimes it's not beneficial. That's how they will know, because they will look at the numbers and they say, gee, really? So I maybe wait. If they're, you know, I might rather wait or not. So that is the reason why it's best to run all of those numbers so they can see the scenarios and yeah, good or not, you see? So let me move, because there's a couple of very important factors here, what it takes to qualify and the purchases. So I'll move on a little bit faster and then we get back into this. So income goes down while expenses increase. Obviously, this happens in retirement in a lot of cases because they only rely on Social Security or minimal investments that they have. Some of them are like that lady. Unfortunately, she's only on Social Security, even though she has a $1.4 million home, she's with a rope around her neck. You know, I wonder what quality of life, how long is she gonna last like that? She's 74, you know. No one can retire safely with a mortgage. That is true. Like the 83-year-old guy, he's lucky that he's healthy. What if he would have got sick and for 6 months he couldn't work? They would have foreclosed on his house. You see? So, switching to a HECM, which is the home equity conversion mortgage, another word for reverse mortgage, is just safer than hoping to be able to continue paying a mortgage into your 70s and beyond. That's really the key. So my key point here is that pay off your mortgage before you retire, if you can, you know. So with HECM, you can make payments as long as you want, or you can stop at any time. So you have that flexibility. If you don't want to make payments, you don't. Never make payments. or if you want to, you can. You see the flexibilities here? So if your existing payments become a problem later, you may not qualify for any loans, including a HECM. That's for people that are in foreclosure like that lady. They having, and incidentally, they still qualify, but I'm gonna explain to you what they do. And sometimes it makes it very harder to qualify. Not because of credit and age, but there is another option that they have to have. So I will go into that. And this is why we wanna prevent before anything happens. So let me move on. So you will, at closing, you get some obligations. I'm gonna skip this kind of, because we can do that in another topic. But you do get initial, you get some disbursements, 15,000, 20,000. Some people get a chunk of cash and they get into line of credit. They pay off all of their mortgages, and they do have some limitations of how much of line of credit they can, and in particular the first year, because they don't want you to get 400,000, 300,000 and go and spend it all in 1 year. Okay, so they have the first couple of years, they have some limitations, and after that, it's up to you. So I'm moving on in that one. Prop 19, here was the good thing. This is for purchases now. We're setting out, this was a lot from the refinances for people that want to set themselves up for retirement and beyond, okay? Now, I'm not an expert on Prop 19, but all of you have already attended several things. But in the bottom line is this: eligibly homeowners, and now they're 55, I believe that's the age, or may now transfer their tax basis within the state to a property of greater value. What that means is that, you know, before Prop 19, if you were to move from the LA County to Riverside County or to Ventura County, and you know, the tax structure was different. Now with Prop 19, everything goes across the board, offering opportunities for somebody that says, hey, you know what? I saw a nice property over in Riverside County near Palm Springs. I would like to retire there. And they can use a reverse mortgage to put half of it down, 50% down, and then the other 50% they can keep it. It's their money, minus their costs, whatever the realtors and the closing costs and all of that is, right? But that's their money. You know, they can invest it and they can buy another property, you know, who knows. Property owners, 55 and older, which is exactly what the Prop 19 will be able to blend the taxable value of their old home within the value of their more expensive home, resulting in positive tax savings. So this is what we already know. So this is how you can also maximize opportunities, even by using even Property 19. Some people like that fellow, that realtor that sold that property in Ventura County and then bought another one, two of them. So he really he helped the client to sell his property, buy two properties. He got 3 deals in one transaction. So you can imagine, and by using this kind of understanding here. So don't miss those opportunities. That's my point. You can combine all of this, Prop 19, ADUs, all of this stuff. So now let's get into buying with a reverse mortgage. So what happens? How do I qualify? This is the key component here. First and foremost, what are the credit qualifications? Unlike regular loans, you know, you need a 640 FICO score, or you need a 700, you get the best rates or what have you. In reverse mortgages, there is no credit qualification. They're easier to qualify than traditional mortgages. You know, you could have a 580 FICO score and still get the same, you know, rate. So it's not a matter of the credit. I will explain to you, it's a matter of the situation, what might make the difference, what we explained. I mentioned that comment, but you're gonna see now why. Again, typically the older the borrower, the more funds they receive. So an 83 is gonna get more than 74, and a 74 is gonna get more than a 62. And there's no credit score. They don't use credit scores. They do credit.
Sorry to interrupt you. Can they contact you for more information in terms of the credit qualifications and any part of this presentation?
Absolutely, absolutely. And I will finish it with a couple of other things. Income, they don't need the traditional, like that. Oh, what is your income? They will ask for Social Security income, whatever income they have. But here's the formula. All of you can know it, all the realtors. It's called residual income. That's what they use. What is your income? Social Security minus your expenses, which they know. And if you have roughly, depending if it's one person or two people, but it's less than $1,000 a month. And the only reason is, I'm going to tell you this for everybody, this is a key part of information. They want to make sure, because yes, they will not have a mortgage, but what about property taxes? What about homeowners insurance? They need to have that, and they need to pay it on their own. So that's why this residual income comes into place, where they ask for the Social Security, they have pensions, they just want to make sure that they can afford to have pay the property taxes and homeowners insurances. So with that, I will just go over, this is a purchase, and you.
Sorry, Mario, we are way over the time. We have to respect people's time. It is from 11 to 12. So can you wrap it up?
Sure,
Thank
sure. Basically, on the purchases, it pretty much works about the same, but they can purchase. Usually it's about 50% down. You can compare the situations, and I will explain a little bit on the, well, we already, to get in Social Security, what happens, this is another, obviously, a few other things that what happens primarily in retirement, about debts and things. But here's the thing, if you have any questions, and I think any of your clients that you may have, the best thing to do, don't get involved so much in trying to answer it, because you can see there is some certain complexity with reverse mortgages. Please feel free to contact me. We don't charge anything. What would the clients get? I need 4 pieces of information. 1, their names, the date of births. That's number 1 for both husband, wife, or if it's only one. 2, their incomes. Obviously, okay, I get Social Security, has a pension and stuff like that, to do that residual income calculation. 3, their home value and how much they owe. That's it. Now, with those 4 pieces of information, we'll run those instead of just plugging in the calculator and trying to say, oh, this is how much they'll get. No, they get the full-blown analysis, like what you saw that they get with the pictures and how much it costs and everything. And that will really help them to make a decision, whether it is a purchase or a refinance. So my information is right there. And again, I guess the whole thing, I think now you see why I say more precious than gold is health and well-being, contentment of a spirit than coral. Hopefully that now, after all, at least what we saw makes sense. So please feel free to contact me at any time, and I will we will run the numbers for your clients, even if it's a purchase or whatever they would like. And I'm here to help. And if you have any questions, there is my phone number, and I will get back to you. So I really appreciate this opportunity. I hope you can see that I went a lot in depth, very much in depth, so you can understand the in-depth of how a reverse mortgage really works and how it can help your clients, and along with Prop 19 and all these other tools that might be available, that are available to all of you. So with that, I really want to thank you all. I know I went over time. I want to respect that. I have a tendency to go over. I get all emotional and passionate about what I do. So thank you so much. Thank you. Thank you. And there is my phone number and my email.
Thank you, Mario. Thank you so much for this informational presentation. We know how to get a hold of you, and hopefully we can work together sometime. Jenny, back to you.
Thank you, Jeff, and thank you, Mario, for your informative presentation. So if anybody has any questions, please feel free to reach out to Mario directly. We know that he has a lot more to offer. And also, please check out other education classes on our website. We have a lot more. CRMLS virtual training. We have top 10 pitfalls of real estate transactions on the 25th. And then we also have SBA loan, and also good luck feng shui tips for 2022 coming up. So please sign up on the website. Thank you so much, and have a great day, everyone. Bye.